Hi, I'm Jonathan Gurney, Portfolio Manager at Gurney Financial. The purpose of these videos is to educate and keep clients aware of what is happening in the stock market. Our goal is to close the gap in communication between clients and the actual person managing their assets. We use fundamentals primarily and technicals as part of our analysis. We hope the charts and education help clients and viewers alike. Friendly reminder, these videos are not to be taken as financial advice. Should you have questions, feel free to reach out to us through our email, social media comment section, and please subscribe to our YouTube channel. So let's get into it. Today is Friday, October 18th, the end of trading day, end of week. Can momentum / growth names get a bid? We will look over a few things and go from there. This week we saw some positive news in Brexit, no real concrete news in China trade negotiations. Today, Friday, U.S. tariffs did go on the EU. 7.5 billion went into effect today. I'm sure that had a little bit to do with some of the downfall today, on top of just some of the earnings did not exactly go ideal. So we got to pay attention to those things. Again, really overall, earnings so far have not been that bad. It's better than expected. Banks overall are hanging in there. The S&P 500 is basically trading the 2960 support below to 3,000. We tested basically the 2980 level today. It was an ugly day for growth, period. Momentum names and growth names continue to struggle in this environment. They go up for 1 or 2 days and they reverse right back. We're really struggling at those bases here. Until we see institutional buying, it's hard to say we want to add more. Again, we have about 25% that we can still add to the market. It was, truthfully, candidly, it was not a great day for many of the growth portfolios that we had. Just being candid with you, I mean, we're not going to win all of them. They had outperformed this week regardless, but today was not an ideal day. But let's get to the charts and we can go from there. Okay, so today, I'm going to take a step back here. Intraday, as you can see, it was an ugly day for the NASDAQ. I mean, that's risk on, growth, momentum, while the more conservative areas, fear areas, did a little better today. For the week, the Russell 2000 small caps did pretty well this week. All major indexes did close positive, but it was an ugly Friday, not ideal. But realistically, the indexes are hanging in there, while many of the momentum names, like as I said, are not really doing well yet. It'll be very interesting to see, can the market continue to go up without momentum and growth names following suit? I believe no. I'm a big believer in following growth names. If growth does not gain momentum from institutions, we're probably going to struggle in this area. But again, one day is not a theme. It doesn't necessarily mean anything really, but we do want to continue to watch institutional buying and selling. And so today we made no moves. It didn't make sense to make any moves. We're basically in the trading range, as I said, so nothing really to make any huge moves on. It's all trade based and earnings based at this point. So if I go to year to date, you can see the NASDAQ is still killing it. It's been a fantastic year across the board. Look at the positive numbers across the board. It didn't matter really what you were in. You did pretty well. And that does concern me a little bit as well. It kind of reminds me a little bit of this period, October to December. Obviously, it's a different environment. The Fed is decreasing interest rates and so on, or cutting rates. But this looked a lot like October when we were doing fantastic and we saw a big dip, October, November, December. I don't think that's going to happen, but we take it day by day nonetheless. So let's take a look at sectors. Intraday, as you can see, not a good day for risk on, meaning technology, communications, and consumer discretionary. Not a great day at all. But realistically, if we look at the week, not horrendous. Obviously, I wish I would have seen technology much higher. Risk on areas are still struggling. Not bad for consumer discretionary nor communication services. But again, those are the three we really want to see do well. Consumer discretionary, communication services, and technology. Those are the three areas we want to see do well. and see growth get a bid. These areas have struggled over the past several months, and I believe we need to see them get a bid. Let's go through the charts. Again, some of the key areas that we are watching. The S&P 500. I'm actually going to skip this chart, but let's go to the next one. It cleans it up a little bit. We have said over the past week, hey, we're probably going to be range bound between the 3,000 level. Again, look, it tested this, bounced lower. We tested the 2980 level, and it actually closed higher. It was much uglier Friday than where we closed. But don't be surprised if we test this gap right here. See the gap between these two? Don't be surprised if we don't test this gap, and hopefully it touches that level and bounces higher. Again, to reiterate, when it tests these levels, it usually brings more bullish sentiment up. So if it can hold this level and go higher, that could be very good and constructive for the market. But as said several times already, we want to see growth names get a bid. We sometimes get a day or two, but consistency has not been there. And it's going to be a grind. So don't expect it to happen in a day or a week or maybe even a month. The month of August, look, it traded in this range, finally got out. We're in this new range, and it could take some time to get out. Just be realistic about that. That's the market. It comes with a ton of frustrations, which usually lead to all-time highs and higher. That's just the reality. So again, we stated earlier this week that we want to see an RSI over 50. We still remain above that, which is ideal. These are good things that happen that we want to see from a technical standpoint. PMO levels, this cross is ideal as well. Hopefully this continues this way and does not curl down. So those are some really good things that we are seeing despite an ugly Friday. So again, one day is not something that's going to change my mind. We got to take it day by day and really pay attention to price action. So put call ratio, just want to show this to you. We are, again, when the put call ratio is high, we then say, okay, a lot of fear is out there. That might be a good time to buy. We're kind of halfway right at the average. So it could go either way at this point. And don't be surprised if the S&P 500 does not test the 2960 level. Go to the next chart. S&P 500 versus gold versus TLT, which is the 20-year Treasury. Again, we said last week, actually, that, look, when it tests these levels, we tend to see a bounce up. So this is S&P 500 versus gold. When it tends to hit this level, it's either going to go higher and the market tick higher, or it goes lower and S&P 500 is likely to struggle. It happened with both. It touched there, went up, went down, bounced again, and went up. So we're not out of the woods by any means, but we are still seeing good things. But it does concern me a little bit, honestly, that we're not seeing growth get a bid consistently. We're seeing indexes go higher, but under the table, it's not ideal. I have to be real about that, and I will trade accordingly. So we are watching very closely at these levels. We're just trading in a trading range, period. It's going to come with good and bad days, just like the market every day. So hang in there. We'll be okay. But just wanted to show that and give you a real perspective. TLT, is it overbought, oversold? Again, a couple weeks ago, we showed, hey, this is a quick move up of over 7.2%. And I said, hey, probably going to trickle down, and it has. Could it go back higher again? Potentially. It's a RSI below 50, which is actually good for equities, a good sign for equities. But again, not any real decisions need to be made at this time. We need to see how this plays out, and we are positioned well should momentum and growth continue to, well, eventually, hopefully, pick up steam. We actually got in at very good pricing to get into those names, so it is still outperformed, but on days like today, it is not pretty. So that's just the realistic perspective, the realistic picture. The VIX, the fear index, we saw a huge dip down below the 50-day and the 200-day moving average. Again, what have we said consistently? When it gets in the 14 to 11 range, you usually see a bounce, and we did see a nice bounce today. But I have to be real. There is still some complacency here, and saying there's very little fear, despite the fact that we are at all-time highs. No real trade deal. So I'm very cautious, short-term, very cautious. I have 75% invested, 25 ready to invest at any time. But we're going to be realist through this. Again, it's nice to see this dip. There are still a lot of good signs from a technical standpoint, and fundamentals are improving. So these are all encouraging signs. So hang in there. But thanks for your trust. We hope this gives you a real perspective, the good and bad. Let us know if you have questions. Reach out to us. That concludes our message for this week. It really has not changed much. We are we're in this trade range between the 2960 and the 3000 level. That's what's happening. So relax. You're going to see 1 to 2% moves in a day. That happens very consistently across the market. So let us know if you have questions, and we're here for you. Thanks again, and have a great rest of the day.